Okay, so let's go ahead and take a look at how to file your income taxes. And what I have up here on the screen is the IRS website. Um, and they have a link here, file your taxes for free. Okay. And then it says pick an option based on your income. If your income is $72,000 or below, they give you a list of these free electronic filing preparations that are basically through a third party. Okay, that the IRS says, yeah, that'll work for us. And if it's above 72,000, then they have these electronic forms that you can fill out and file yourself. You could also do these even if your income is below 72. Okay. But it's these fillable forms that I think that you probably print out and mail in. Unfortunately, these fillable forms are normally open right away in February, but this year the IRS has kind of pushed things back a couple weeks, so they're not ready yet. This says this opens February 12th, so we can't look at that option anyway. So we're just going to look at the other option and maybe sort of walk through this. I'm not as big a fan of this, but it's okay, and it changes a lot from year to year because these are just the tax prep services, and they have a free option, but they're always trying to sell you on something. Okay, so they give you some like frequently asked questions and tell you stuff that you need to bring with you. You're going to need your W-2. I have here a sample W-2 that we're going to use for the purposes of this because it has like some of the stuff filled out and it's not very complicated. And when I was looking at their options, most of their options seemed fine. Oh, and now I'm realizing the one that I started picking doesn't really work. Oh wait, no, I didn't pick that one. No, I don't know which one I picked. Tax Act. Oh, they're in a different order. Okay. Anyway, the thing that you want to look at if you're going to use one of these, you probably want to also file your state taxes at the same time. So I would find one that allows you to do Illinois state taxes, right? So like this first one says it doesn't do any state taxes. I'm like, well, okay, that seems lame, right? So, you find one that will work for state taxes in Illinois, right? So like this one is great if you live in one of these other 4 states. Okay. Tax Act works. Is that the one I picked? Yeah. Okay. Tax Act works. Your adjusted gross income has to be $63,000 or less. You have to be 56 or younger. And then, seems fine. So that's the one that I picked. Okay. And I didn't even really start it because I wanted to walk you through from the beginning. And what they do is they just, walk you through some questions and they, ask you everything. So what we're going to do is file based on this person, okay, Jane A. Doe, okay? So we're just going to file singly, okay? So we fill it out, right? So we're filing a single. Right? And I wonder if it's going to give us some problems with this. Okay, but our sample social security number is 1, 2, 3, 4, 5, 6, 7, 8, 9. That's not anyone's real social security number. Pretty sure that one was taken out of the pool. Maybe date of birth on here. Our W-2 doesn't have a date of birth, so we're just going to make one up. We'll say this person was born today, so 2, 3. Except we need a different year. We need to make them a little bit older. We'll make them 20 today. Mobile phone. I wonder if I need to fill that out. We'll see if they require that. All right. Occupation professor, why not? All right, legally blind or permanently disabled or passed away. Now, I know that this seems strange, right? How could you file your taxes if you're dead? And you can't, but somebody else can file them for you, and you still need to file taxes even after you die. Okay, unless your estate has been sort of cleared. For most people, that's not a big issue. But like, if you died during 2020, um, then you still need to file taxes in 2020. This is important. Can you be claimed as a dependent? Okay, so if your parents are claiming you as a dependent on their taxes, you still file your own taxes, but it makes a difference. Okay, so make sure you're aware of that when you fill out taxes. Other than yourself, did you financially support anyone in 2020? Okay, and again, we're going to file on behalf of this person, and we're going to say no, they're just going to be a single individual with no dependents. Okay, wow, that's an actual zip code. But on this form, it says this is in Pennsylvania, but it's an actual zip code in Virginia. Okay, that's fine. So we're going to file as single. Okay. So as you can see, filing your taxes is not that complicated a situation. And what I want to point out is that some of the stuff that we studied yesterday, you don't need to know quite as much to file your taxes. Okay, and then we'll talk about why did we go through all that extra stuff. Okay, do we have any investment or savings accounts? We're going to say that no, this person didn't have any. Child care, adoption, alimony, health insurance, none of the above. Education expenses, now we'll just say none. Now remember, when we're filling this stuff out, the reason they're asking us these questions is they're trying to figure out what are our deductions and adjustments. And for most of you, well, I mean, I shouldn't say most of you, but like, for a lot of people, the deductions are going to be covered under the standard deduction, because if you don't hit that $12,400 threshold for the standard deduction, if it's less than that, then your itemized deductions don't matter. However, going back a little bit, oops, back too far. When they talk about income, you do have to declare that. You can get in trouble for not declaring that. And then some of these other things, like, might be considered adjustments instead of deductions. I think these are still deductions, but like contributions to your retirement and things that you put into a health savings account. Okay, those are all adjustments, and the reason that makes a difference is because every adjustment counts, even if you're taking the standard deduction. Okay. Owning a home, selling a home, these are all things that are going to, again, affect deductions. I'm just going to skip them. Okay. So now let's look at the W-2. So we'll start with your employer's EIN. It's Employer Identification Number. And if we pull up our W-2, right here at the top, right, the very first thing is your social security number that identifies you. The next thing is your employer's identification number that identifies who they are. Okay, so we fill that out. So 11, 22, 33, 44, 5. Okay. And then we have to fill out our employer's name. The name is the big company. One of the things that I want you to notice as we're going through this, and the different, this isn't the IRS exactly. This is just an IRS approved site called Tax Act. But it says box C in here, and you'll notice on your W-2, the last one said box B, that's your employer identification number. Box C, that gives you the stuff. So they're sort of directing you where to find the information in your W-2, right? So when you have your W-2 form, that helps you walk through exactly where to find stuff. Okay, so it was 123 Main Street, anywhere Pennsylvania, 12345. Okay, and now we start filling in the important stuff here. You know, how much money did you make, right? So boxes 1 through 8. Right, so that's over here on the right. So instead of letters, we now jumped over to numbers. So wages, tips, and other compensation, and Social Security wages. We have the amount of tax withheld and so on. So let's see if I can put these side by side. Okay, wages, tips, and other compensation. Just fill out exactly what we have. Oops. Be very careful that you don't misplace a decimal. You don't want to pay taxes as if you've made 10 times as much as you did. Okay, federal income tax withheld, that's how much you've already paid in taxes. Social Security wages, Social Security tax withheld. Okay, and we didn't get to it yet. Social Security tax is kind of like an income tax, but it's a little bit separate. You don't get any deductions or anything from it. Everyone sort of pays it, and we can look at. Maybe we'll look at that tomorrow. We'll clean up little odds and ends here and there. But like that's that's money you don't get back. You don't get refunds on that. Okay. This one says it's okay if some fields are blank. Okay. Other times it might say that you should enter in a 0 if there's nothing there. So we're just going to leave these blank because it says that it's okay there. Okay, employer codes, box 12, right? So I look at box 12. Okay. And it says employer code, select D, and the amount, 1,500. Okay. And then we have another one, DD, amount 1,000. And then another one that says P. So I find the P on here, 4,800. Okay. And what this is doing is, again, this is a sample W-2, so I don't really know this person's backstory because it's all made up. But if I look at the letter codes, D is elective deferrals to Section 401k. What that means is that this person chose to have some money taken out of their paychecks for their retirement, right? Some extra cash out of their paychecks. Okay, so that's going to end up being an adjustment. Okay, and so we have that listed on the W-2. Cost of employer-sponsored healthcare, again, that's going to end up being an adjustment. And then excludable moving expense reimbursement. Okay. So it sounds like that, maybe your company paid for you to move, and I think that can also count as an adjustment. Okay, now we look at box 13. It says retirement plan, right? Checked, so I just follow that. Box 14, other. Do you have something in box 14? No, I don't, so I leave that. Okay. Boxes 15 through 20. Okay, the state is Pennsylvania. I wonder if it's going to give me a problem because when I entered the 12345 zip code, I think that came up as New York. So if they have some checking in here, then they might give me a problem. Okay. State wages and tips, $50,000. Okay. State income tax, $1,535. Okay, local taxes. Okay, we're on to box 18. Local wages, tips, etc., $50,000. Local income tax, $750. And then locality name, and it says MU. So oh, I see. There's only so many localities, I guess, that charge income tax. Okay, and so we won't run into one of these because Illinois is not on that list. City of Yonkers, New York, Pennsylvania locality, Ohio, Missouri, Michigan, Maryland. Okay. Since that won't apply to us, we're just going to leave that one blank. We'll say 0, unselected, because it'll take us into something else later. Don't have a second W-2. If you do, right, if you worked more than one job, it doesn't have to be simultaneous, right? If you just worked one job for a few weeks and then you worked another job, right, both of them should give you W-2s. Okay. Here we don't have another one. All right. So review. No, we're good. Okay, let's look at deductions. It says we qualify for the standard deduction. We'll just take the standard deduction. So again, our threshold is $12,400. If you have no chance of getting anywhere near that, you don't really have to spend the time itemizing your deductions. If it's possible you could come somewhere near that, you might want to look at your itemized deductions and see if you do, because then you might be able to take a bigger deduction than the standard one. So we took the standard deduction. Do we make any cash donations to nonprofit organizations? We'll just say no. Okay, now we'll continue on to credits. In your taxes, one of the things that they're going to be doing this year is the stimulus payments that we got last year. If there were any errors, if either you didn't get your stimulus payment or you didn't get the right amount, this is especially true if maybe you have like children or something like that. Okay, maybe they gave you your stimulus check and one of your kids but not the other, or none of your kids or something like that. If you didn't get all the stimulus money you were supposed to get, in your taxes is where you will be able to get that money back in the form of a credit. Okay. So if you receive both stimulus payments, then we don't need to do anything. Okay. But let's say you received one and not the other. Okay. Then this is where you would fill something out to fix that. What was the first one? Does everyone remember what the stimulus amounts were? I think the second one was $500. And the first one was like 1,200. Does that sound right? Does anyone remember?
That sounds right.
Okay.
The 1,200, and I think it was maybe 500 or 600 per dependent.
So we're going to file this as if it's one person, so no kids or anything for this filing. 600 for the second one. Okay. All right. Okay. All right, we'll move on to miscellaneous. Since this is a fake return, I don't want to set up any bank account information, but what they're doing here with talking about your bank account information, if you end up getting a refund on your taxes, if you're going to get any money back, then it will just come in as a direct deposit instead of them having to mail you a check. Mailing a check takes a lot longer because they usually don't put it in the mail right away. Okay, do any of these apply to you? I have an identity protection pin issued by the IRS. So like if you filed your own taxes last year, you probably have one of these. I received, sold, sent, exchanged, or acquired a virtual currency during 2020. So if you have something like, Bitcoin or something like that, and you did anything with, you need to disclose that. You can optionally donate to the Presidential Election Campaign Fund. Okay. Say none for all of these. Okay. So we're getting a refund. So what we can do is we can click here to view our tax return. And let me see if I can blow this up a little bit. But what they've done is they've said, okay, this is what your tax return looks like. This is what the form looks like. And they just went ahead and filled it out for you. Okay. And, you can also, on the IRS website, that other option that we were talking about is a fillable PDF. This is the form that you would be looking at, right? The form 1040. And you would just fill in the values as you go. Okay. And if you didn't have the website helping you, you just have to do a little bit more reading. And the IRS also provides like an instruction booklet that allows you to follow through, and it gives you directions, right? So it's kind of the same thing as the website just did, but you have to read a little bit more to make sure you put things in the right spot. So, like number one, wages, salary, tips, etc. Right? You put in here, okay, taxes, exempt interest, okay, qualified dividends. So the information booklet sort of explains what these things are and whether or not you have to fill something out. Notice that we have a lot of blanks here for the one that we filled out because like we didn't have any capital gains or, we weren't collecting a pension or anything like that. Okay. Charitable contributions. And it also gives you the instructions for what to do, right? So like take the standard or itemized deductions. There it is. Okay. And then it says, okay, add lines 12 and 13, right? That's your deductions. Taxable income, subtract line 14 from line 11, right? Oh, I'm sorry. Well, I skipped some steps here. So here on line 9, that's your total income. So we took your income from wages, tips, etc. This is income from other stuff like pensions or, dividends from taxes or something like that. Okay. So this is our total income. Okay. And then what it does is it says, okay, here you're going to figure out if you had any adjustments, and we didn't have any. So then line 10C is your total adjustments. So then it says subtract line 10C from line 9. So subtract 0 from 53,300, and I get 53,300. So this is our adjusted gross income. Okay. Then we have our standard deduction. We didn't have any extra deductions, so this is our total deductions. So now we get our taxable income. So we subtract line 14, our deductions, from line 11, which is our adjusted gross income. So I do a subtraction and I get my taxable income. Okay. Now, in order to compute the tax, what I had you guys doing was figuring out how much money goes into each of those buckets. If you do this by hand in the instruction booklet, they actually print out this giant table that says, if you make this amount, you pay this much in taxes. If you make this, so they've essentially done that computation like for everybody. And again, I don't have that because the forms for this year aren't available. I guess I could have pulled up forms for last year. I would have had to dig them out though because they sort of close that down. But you can find them if you go digging. But that's how you compute your tax. So this person owed $4,794 in tax. Okay. And then it says amount from Schedule 2, line 3. Well, if you don't have a Schedule 2, you don't have to worry about that. The schedules are for extra stuff. For example, if you own your own home, there's extra stuff associated with that. So you fill out a schedule. And again, in the instructions, it will tell you what schedules you'll need. Or if you use that like online website, that's why it was asking us those questions. And if we had answered yes to a few more of those, then it would have, had us get the information we need to fill out one of these schedules, which is just like an extra worksheet for whatever complications that you have. Okay. Here's the child tax credit. This person didn't have any dependent children. Okay. So add stuff up. It's all zeros. Subtract line 21 from line 18. Okay. What they're doing here is they're taking out your credits. Okay. So our total tax was $4,794, but we paid $6,835, and that's why we get a refund. Okay. So getting a refund doesn't mean that the government is like paying you money. It's just that they're giving you back because you overpaid. Okay. Now, one note about that, if you overpay the government, they will give you your money back, but they don't give you any interest on it. However, if you underpay the government, if you don't pay enough taxes during the year and you're off by a big enough amount, they can impose penalties on you because they want to get their money through the course of the year. They don't want to wait until next year to get this year's taxes. So they want you to be paying as you go. And if you don't pay or you don't pay enough, they can hit you with a penalty. When you first get a job, one of the forms that you fill out, talks about like withholdings and stuff like that. And it's supposed to make sure that that doesn't happen. Okay, and that's it. This is what a full tax form looks like. Okay. So that there's not much to it. And what happens is if you have like a more complicated life, if you have a lot of financial stuff, like, you have a house or maybe rental properties or, maybe you trade in stocks, things like that, and you have capital gains. Okay. Those are these extra schedules that they were talking about. And you might have, one or more than one of those. And they're labeled funny, right? Like, so here it says Schedule 1, here it says Schedule A. So it's not like they're all numbered nice and consistently. Okay. If you have business income, attached form 8995, right? So again, if you're self-employed, there might be more to it, or if you have like a lot of business expenses that you pay out of your pocket. Okay. But otherwise, that's it for your federal taxes. Now, I think this thing said that it would also do state taxes for us. Okay, so there's kind of a summary of what we get. Should we continue to your state tax return? Yes, please do. Okay, now when I was filling in the sample W-2, they like to have these cute numbers like 1, 2, 3, 4, 5, and that ended up putting us in Pennsylvania instead of Illinois. But it's not a big difference, right? So we just say, okay, yeah, we're a resident of that state, county, I don't know, just pick one, school district, I don't know. Oh, I'm sorry, complete the information below. If 2/3 of your gross income is from farming, check the farmer's box. Yeah, no, so we're not going to fill that. Gross compensation. Would you like to review your gross compensation entries? No, we'll just have it fill it out. Would you like to review our business expenses? Well, again, this sample one that we have, we didn't have any business expenses. Okay. Do we have taxable interest income? And again, we're going to keep this simple and just say no. Dividend income. So dividends are from stocks. typically. Capital gains and losses. Okay, so like if you bought or sold a house, you might have capital gains. If you, again, if you traded in securities or something like that, you might have these. Section 529 contributions. So Pennsylvania allows a deduction for contributions made to IRC Section 529 tuition account program. So this is like a college savings thing that's really common. It's not specific to Pennsylvania at all. Okay, in Illinois, it will do the same thing where they say, okay, you can deduct stuff from your 529. But again, we're going to say no. No children. We didn't say for any kids. Did you pay tax to another state? That's important, especially if you live like on a border, right? Maybe you live in Illinois and work in Wisconsin, right, or something like that. Okay, then you don't want to pay taxes to two different states for the same income. Okay, so if you paid state income tax in another state, then they take that into account here. Special tax forgiveness credit. Since this is special to Pennsylvania, I'm going to say no, but otherwise you should fill that out. Okay. What they're doing here on this website is saying there are other credits that are out there. Take a look, see if you qualify. Okay, so employment incentive, jobs creation, research and development. So there's a bunch of different credits that you can see if you apply for. Now, again, we have to be a little bit careful. I have this made up social security number, right? So nothing's going to actually go through. Okay, but it's walking you through other credits that you could maybe qualify for. Okay, use tax. So again, this says Pennsylvania, but it's the exact same thing in Illinois. Use tax is the counterpart of sales tax for things made over the internet. Now, things have gotten a lot better lately. When you buy something at Amazon and it sees, oh, we're shipping to Illinois, then they make you pay Illinois state taxes. So then you don't have to worry about it. But if you buy something off of like eBay, okay, maybe you don't pay taxes. If you buy something off of, whatever other website, they don't always collect taxes, and you're still supposed to pay sales tax on that. So instead of calling it sales tax, they have passed a law and they call it a use tax. And if you bought anything through the internet or through a toll-free number or a mail order catalog, anything from anywhere else out of state, if it was in state, they would have had to already collect the sales tax. Okay. And then this tells you, okay, this is how much it is. This is 6% state tax plus an additional 1% local tax, depending on where you are. Okay, and you're supposed to pay that here. Okay, so we'll just say, okay, we paid all of our. We didn't have any of those. Do we want to review any information for underpayment penalty? No, because it says we don't have a penalty. Okay. All right. We'll just continue on through. Okay. In this case, it says, all right, here's our taxable income. Okay. This is how much we owe. This is how much we paid. We didn't pay enough, so we owe $147. Okay. Why is it that the federal government gave us back $2,000, but the state charges $147? This is also often the case in Illinois. Illinois is a flat tax state, so if you end up getting like a lot of deductions or adjustments or anything like that, the state taxes, it doesn't matter. Okay, so oftentimes the state tax is going to be really close. You usually don't owe or have to or get a refund by very much. But on the other hand, sometimes you have to pay a little bit, even if you got money back from the federal government. Okay, and you definitely want to do that, right? The the penalty for not paying your taxes is a lot worse than something like $147. Okay. Oh, and now it's saying Virginia. Again, this is my fault. When we created this tax filing thing, this W-2 said that we're from Pennsylvania, but this zip code is not from Pennsylvania. Okay. And neither is this one. This one is from New York, and this one was like from. So this is why everything's getting messed up here. Okay. So I think we'll call that quits. I think we've walked through enough, but it's trying to get us to do another state, and we don't want to do that. But that's all there is to filing your taxes. It's not nearly as complicated as all of the math that we were doing yesterday, because that math stuff is typically done for you. And even if you were filling it out by hand, even if you went to your local library and got a paper form, which you can do, and filled out your taxes by hand, you still don't have to do all that math, because they include in the instructions these giant tables where you just look up your income and it tells you how much you have to pay. Okay. So, why did we go through that? Why did we go through those crazy formulas yesterday? With the tax brackets and stuff. And the reason that I wanted to do that, the reason that I felt like it was helpful, bring this up real quick. Okay. When we were looking at like these tax brackets and stuff, is because I think it helps make it sort of an informs you about how your taxes are actually computed at the federal level. Okay. And one of the things that I wanted you to notice with your taxes is that if you make more money, you will always pay more in taxes. Okay. But you'll never, like, if I work a little bit of overtime, it will never make the amount of taxes I pay go up by more than the money that I make. Right. So let's suppose that you're single and it's the beginning of December and you've already made $40,525. And you say, okay, do I work a little bit extra, but that jumps me into the 22% tax bracket? Do I end up losing money that way? And the answer is no. It's only the extra money you make that's taxed at 22%. The money you've already made is being taxed at 12 and 10%. So the money that you already made never changes the percent that it's being taxed at. Okay, it's only the new money that you make. So one of the misconceptions I think a lot of people have is that you can like jump into a new tax bracket and that jumps your taxes by a significant amount. Okay, but if I make $40,525 and somebody else makes $40,526, okay, they don't pay significantly more than me because they jumped into a new tax bracket. Okay, that $1 extra they make is taxed at 22%, so they'll pay 22 cents more in tax than I do. Okay, right? So that's one of the things that I want to look at, and it's sort of the whole process, right? How are taxes computed? What are adjustments, deductions, credits, and so on? The idea was to try and take some of the mystery out of that and to understand where that stuff comes from and how it impacts you. Okay. And that might also be helpful, like if somebody's saying, oh, we want to change the tax laws, and you want to know, is this going to help me or not? Well, if you understand what's going on a little bit better, maybe that can make a difference to you. In Illinois, right now we have a flat tax rate. I think it's something like 4% of your income, no matter how much you make. Okay, and there was a proposal in the last election to change it to a setup like this. Now with the numbers this high, but to change it so that you might pay a higher percentage if you make more money. Okay, and it didn't pass, but that's something that you want to be informed about, when it comes up, right? Understanding the difference between a progressive tax and a flat tax. Okay, and then I'm not trying to tell you that one is better than the other. I want you to understand what they both are so that you make your own informed choice instead of relying on rhetoric. All right. I think that's it for the taxes that we're going to do today. Tomorrow, what we'll do is we'll go through some more examples and homework examples, and maybe clear up little odds and ends like the Social Security tax. But I think otherwise that's it. If you have any questions over homework, stick around.